The rupee has hit another new all-time low. You have seen it at 64.24 on your screens now. So 1.5% of a decline coming in. This is actually in last 5 or 7 minutes that the rupee has really slid quite strongly into the market. Remember, today's best rate has been 64.10, and from those kind of levels, though, we have seen a continuous slide yet again coming in for the currency. Let's get in then. Suyash Chaudhary, he's head of fixed income IDFC, and he joins us on a Mumbai phone line. Suyash, hi. Yesterday was a day when you saw some positivity coming in sense of banks and the rupee as well, and we did see this day start with that kind of a positivity as well. What really do you think has turned around for the market?
Well, the setup is kind of weak in the sense that dollar has broadly been gaining against Asian currencies over the last few days. So the problem with the rupee over the near term, I would imagine, is rather the lack of dollar supply than anything else. But the one positive we note since yesterday is that forward rates are beginning to fall, which potentially could lead to some interest from offshore players at the front end of the bond curve.
Suyash, what's your sense and what are you reading into the Fed minutes today in the evening? Because that is another major event which really seems to be pressurizing most asset classes.
Yes, but if you look at the official statement released by the Fed and the minutes pertain to that meeting, there seemed to be, in fact, a little bit more dovishness, which at the time had pushed back expectation of QE somewhat. So I wouldn't think the Fed minutes would be very disruptive to the current market expectation, which is as a base case for some bit of taper to start between September and December.
Suyash, what's your sense now coming in for the Indian currency? Because the kind of decline that we have seen on every single day in this week itself has been very disturbing. 1 rupee being shaved off on a daily basis. How scary is that?
Well, like I said, it's a combination of 2 or 3 events. One, there was clear market disappointment with respect to the dollar garnering measures that was announced by the government of India. So even though they total to 11 billion odd, but many of those items pertain to ECB and offshore raising of funds, which anyways happens as run-of-the-mill. Secondly, it's to do with a global backdrop where Asian currencies are weakening. And thirdly, and possibly almost equally importantly, there seems to be some bit of a hands-off approach with respect to the rupee as far as policy is concerned. So what we hear at least is, the daily intervention, either verbally or via measures, may get stepped back on. And the RBI and the government may in fact be okay for the rupee to find some sort of a level on its own. So I think that is basically defining the backdrop right now.
So you're 64.36 and counting. The kind of decline that has suddenly come into the markets is getting just intensified there. I mean, I know it's a difficult time, but is there a level that you have in mind coming in for the currency?
No, not at all. I mean, fundamentally, there is enough of reason to expect that on an RER basis, the rupee is now possibly undervalued, but that is not to say that it cannot overshoot valuations in the very near term. So I would imagine in the very near term, it's a function of availability of dollars in the near term. But having said that, I would refocus attention on forwards falling and potentially some amount of interest coming in at the front end of the bond curve.
Yesterday we saw RBI coming out and intervening in the spot and the forward market as well. How strong do you think that the intervention was, and do you see that kind of an intervention coming in back yet again?
It's quite possible. So if the story has moved to the forward part of the curve, I would think that's a good way to intervene so that, on an all-hedge basis, India front-end rates begin to look better. But, like I said, I think at some level policy will have to live with a weaker rupee in the near term and let that be the case.
Well, if you look at the latest Nomura report and the Deutsche Bank report that has come out today in the morning, 70 is a level that many people, many big brokerages are now voicing at. I mean, do you see that kind of a pain in the Indian economy, currency, for that level to come in?
It's difficult to say. At the same time, when an asset class is under pressure, then, all sorts of expectations abound with respect to that. Equally, what is possible is if the government of India were to act substantially on, let's say, a hike in diesel prices, and yesterday there were some murmurs in the market about a potential NRE bond issue as well. So if these two factors were to come in play and market starts focusing there, then you could even see some arrest of the decline. So, at this juncture remains a little difficult call.
What's your sense coming in for the bond market as well? Because yesterday was a very difficult day to start with. We saw a good ending though. Today, yet again, we have seen a complete turnaround coming into the markets. What's your sense on that space?
So as far as bonds are concerned, the RBI has quite emphatically moved in to say that the intent of the currency defense measures is not for long-end rates to harden. Towards that, they are going to do open market buyback of bonds this week to the extent of 8,000 crores, and they may follow this up with future buybacks as well, depending upon how they see yields shaping up. Secondly, they have allowed a lot of relief to banks to transfer government bonds to HTM at 15 July prices. So that has led to bond deals rallying. So yesterday we closed at 890. Today we are at 845. So the outlook broadly is range bound in the near term. The free fall we had seen for 3 or 4 trading sessions until yesterday seems to be over, given that RBI has backstop bond deals to some extent. In the near term, we will obviously focus on the rupee as well. But with a medium term view, we are quite bullish on bonds.